viewers, welcome back to my channel. So in this video I will be giving a review of one IPO that is currently open and closes for subscription today, that is Blue Jet Healthcare IPO. So the company is actually coming with an IPO that is open from October 25 to October 27. So the price band for this IPO is 329 to 346 per share and the lot size is 43 shares and the total issue size is 2 crore 42 lakhs 85,160 shares. So the company is likely trying to raise around 840.27 crores and the minimum lot size is 14 lots. Minimum lot size is 43 shares and the company the listing date is proposed as 6th of November. And regarding this subscription figures for this IPO, at the end of the second day of the subscription, the IPO will actually close for subscription today. And as on second day, the issue is actually subscribed 0.1 times in the QAV category, and high HNA category is already subscribed 3.2 times, and retail is already subscribed 1.49 times. Normally in the subscription actually increases on the last day of the issue, so we can actually expect that the QAB will actually surprise the subscription figures. It will automatically be oversubscribed at least one to more than one time at the end of the last day. So regarding this company, this company is a pharmaceutical. This company is incorporated in 1968. It is a pharmaceutical and healthcare ingredient and intermediate company, and it is one of the first manufacturers of saccharine or artificial sweeteners and salts in India. And they actually expanded into contact media intermediates, which are used in CT scans and MRIs, and they actually deal in three product categories: contact media intermediates, high intensity sweeteners, and pharma intermediates and active pharmaceutical ingredients. It is basically an API company. This company, Blue Jet Healthcare Limited. So it is a global science-led pharma company. They are the providers of process development and production capabilities, global regulatory support, collaboration development and manufacturing advanced APIs and intermediates. So they have three manufacturing facilities located in Shahad unit, Ambernath and Mahad in the state of Maharashtra. Shahad, Ambernath and Mahad in the state of Maharashtra with the annual capacity of 200 kiloliters, 607 kiloliters and 213 kiloliters. And their company's strength lies in the following: they have huge manufacturing capacity of contrast intermediates in India. The company operates in a niche market which has high entry barriers and long-term. It has a long-term relationship with long-term contacts with multinational customers. And this IPO, regarding their profitability, as on FY21, they posted a total revenue of 507 crores and a profit of 135 crores. And in FY22, they posted a revenue of 702 crores and a profit after tax of 181 crores. And last year, FY23, they posted revenues of around 745 crores and net profit of 160 crores. So there is a slight decline in net profit, even though there is an increase in sales in FY23 as compared to due to increased raw material prices, possibly due to increased raw material prices. And for the first quarter, they posted a net profit of 144 crores on a revenue of 184 crores. So there is an increase in revenue noticed from FY21 to from around 507 crores to around more than 700 crores this in the last 2 years. But there is due to the increased raw material cost, possibly then there is a slight dip in net profit. But it's a very good profitable company. Net worth is for 725 crores. It is continuously increasing. So altogether, the financials look good for this company. And most of the brokerages, this IPO is actually coming at a price. They have an EPS of around 9.23 at the price band of 346. The price earning multiple is around 37, and the market cap is 6,001 crores. So their return on equity is 26%, return on capital is 31.9%. So the issue is aggressively priced at around 37 times its earnings. So if the company is able to get good subscription figures, this company can actually expect a good listing. But regarding the analyst recommendation, Dilip Davda in this website chitorgar.com has put a subscribe rating on this IPO, and they actually mentioned that and the company has competencies in manufacturing capabilities in contrast media intermediates, high intensity sweeteners, including saccharines and salts. It manufactures a range of products in-house and including key intermediate and advanced intermediates, which allow it to control production process for consistent quality and cost effectiveness. The company has a total of 400 customers in 39 countries. It has built a long-term customer base with innovative pharmaceutical companies and multinational generic pharmaceutical companies, supported by multi-year contracts. They have multi-year contracts with many multinational companies, so that will actually help the companies in the long term and increase demand profitability. And they are actually into three main categories mentioned here. And the oral market is reasonably concentrated with the top 5 players like Procter & Gamble, Johnson & Johnson, Unilever and GlaxoSmithKline, which commands around 60% in aggregate. And these companies are one of the clients of Blue Jet Healthcare. So as a result of consistent quality high intensity sweeteners, Blue Jet Healthcare has become a part of select supplier base of several multinational companies in oral and non-alcoholic beverage market like Colgate Palmolive, Unilever, Pronova US LLC, and MMAG company, and many other international domestic customers from all the end product categories. So you can see that these MNC companies like Colgate Palmolive, all customers are customers of Blue Jet Healthcare. Blue Jet Healthcare is actually a supplier to these MNC companies. So strong tie-up with these MNC companies will actually help in this company. And according to the management, their top line has 85% global revenue and 15% domestic contribution. And post expansion ratio will be largely maintained. The domestic contribution will be around only 15%, and 85% will be the revenue from the export market. And with a major thrust for exports, the plans for debottlenecking capacity utilization as an ongoing process. Raw material prices fluctuations caused ups and downs for the bottom line, but the management is confident that the maintaining the profit growth forward with high margin product mix. So the management is optimistic that the company will able to maintain the increased profitability in future, and they actually expect the raw material prices to soften in future, so that they can actually increase the profitability also. And the lead running manager for this issue is Kotak Mahindra Capital and ICICI Securities and JP Morgan India. A link in time is the registrar for this issue. So the last the report on the financial performance I already mentioned here. So the price earning multiple average EPS for this company is 9.4. The company is actually coming with the IP price earning multiple of around 37 times. So that is a the conclusion is in this website is that the Dilip Dev has given a subscribe rating for this IPO. The company has created niche market in the global niche place in the global market from products manufactured by it, and enjoys a long-term relationship with customers and market customers and FMCGs. It is on a capacity expansion spree and hopes to improve the performance in the coming years. On the basis of FY24 earnings, the issue price fully priced. Investors may park funds for the medium and long term reverse. So I also feel that this issue, as per the recommendation by Dilip Davda, he believes that the company has long term tie-up with multinational customers. So that will actually help the company, and is planning to expand capacity also. The companies can the investors can actually apply for long term. That is what is mentioned in this website, Chitorgar. And many other brokers also given a subscribe rating for this IPO, like Ajgon Global Services, BQ Equities, Capital Market is only one that has put an avoid rating in this IPO, and Choice Equity Broking, Dilip Davda, Geoji Securities, ICICI Securities, Insecurities Investment, Motilal Oswal, Mehta Equities. So Motilal Oswal actually given a subscribe rating in this IPO with the below. They think that we given the complex product portfolio, presence in niche, strong client relationship with high entry barriers, this IPO valued at 34 times is on an annualized basis. We believe that the company could benefit from the planned capacity expansion sector tailwinds. Hence, we recommend subscribe to the IPO. And the capital market is the only one that does not provide an avoid rating in the IPO, possibly due to valuation concerns. And Reliance Securities, Social Finance, all these companies have given a subscribe rating for this IPO. So, in my personal opinion, I will be applying for this IPO considered based on the oversubscription figures. The issue is oversubscribed in the issue already oversubscribed in the retail space. So I am actually expecting the retail segment to be oversubscribed by at least 3 to 4 times, and HNI subscription is already oversubscribed by 3 times. So based on the subscription figures that we actually see till 12 p.m., I think I will be considering applying for this IPO. But if you are actually convinced about this company, that they are tie up with MNC companies and valuations, you can actually apply. But I am planning to apply if the subscription figures are actually good. So based on the market condition is favorable, we can actually expect a good listing. But long term, I am actually expecting that this company can actually increase revenues in future based on the strong tie-up with MNC companies. And based on the increased revenues, there's a good chance that profitability will also increase and the share price can actually move up in future. So that is my expectation. But it is investors to decide based on what they see in the based on the recommendation of the brokers and what they actually feel about the company. They can actually make their own decision.